Hey everyone, this is Peter Mueller. Wanted to have a conversation with you today about having clarity with your brokerage goals and a process that I like to call reverse engineering. Basically, it's a process that has about 5 different steps. And this is all about having clarity as to your expectations, clarity of the future focus of where you want to go and what you want to accomplish for your company. And you don't want to be overcomplicated here. You want to keep it as simple as possible, but I can give you some really key tips and benchmarks to help you out with this perspective. So the first perspective or the first step of the process is begin with the end in mind. So I'll give you an example. Let's say you are starting a new office, or you can even use an existing operation as an example. What I always like to do is I like to say, well, first of all, before you start anything, figure out what your potential is. What does that mean? Beginning with the end in mind means what is the potential? How many agents are within this demographic that that you want to build your office in? What is the potential number of agents that are within this quadrant, let's say? Like, for instance, when I started my brokerage back in 1994, I did a little 10-mile radius. I don't know if that applies to every demographic of every county, of every city or town, but for me, I could take a 10-mile demographic and I first define how many are agents within this demographic. Back in those days, I still recall it to be over 600 agents within this demographic. That's the first, let's call it step. The second step is, well, how many agents out of that 600, let's say, are quality agents that are going to achieve the objectives that we have. So let's say a minimum objective of $2 million in volume per agent. How many of those 600 actually do at least 2 million and above? In my demographic, I believe it was about 250 of the agents were 2 million and above. Let's call it 200 just to be conservative. So 200 agents above. And then the next question is, what is my potential? What can I reasonably expect to attract if I have a great brand, great organization, great value proposition? What's that number? So let's use the number 30 agents as an example. You can use this process regardless of how many agents you ultimately define, but you have to start with something. And so that's the first step. Start with the end in mind. Say, okay, I want to build an office that will accommodate, in this case, 30 agents. So that's the first step. You got to know what your potential is before you go blowing your brains out in costs and big space and spending a lot of money in leasehold improvements and everything else. So that's the first step. So what is the potential? I use this all the time with my existing clients and with brokerages all the time and say, look, if you're at 30 agents right now, what is 100% look like? You know, is it 40? Is it 50? Is it 60? But be conservative. It's best always to be conservative when you make any sort of projections or whenever you try to set a goal. So that has to be established, because once you know what that end game is in respect to number of agents, now you can reverse engineer everything. So let me help you out with a couple things. First of all, one of the most important things that brokers never do is figure out how much net profit do I want to make. Seems obvious, but it's certainly not the motivation or the inspiration to getting into the brokerage business. It's usually because it's the next thing to do. So if you want to do this right, you look at it from a business perspective. What you want to look at is, okay, if I can get to 30 agents, how much net profit do I want? So a lot of brokers don't have the answer to that question because they don't know what a reasonable benchmark is. Well, I'd be happy to share that with you. Based on the fact that I've done 700 profit analysis of brokerages throughout North America and got a feel for what their average gross profit or net profit is per agent per year. I found that on average, on a study I did not that long ago, 370 offices, that the average net profit was $2,500 per agent per year. But a benchmark for net profit is $5,000. I think $5,000 per agent per year is a realistic, decent net profit objective for most. Again, you have to be very careful when you're defining this, but I would say very comfortably 5,000 minimum. That means if your goal again, starting with the end in mind, is 30 agents, then we ultimately know that $150,000 is the net profit goal. And that has to be where you start. You have to start with that in mind, because with $150,000 net profit as a goal, you also realize that that represents about $500,000 in value. That means if you sold the business and you got to that level, you've got something that's worth $500,000. Now that's a goal that's worth fighting for, a goal that's worth striving for and being excited about. Not just, I want to get to 30 agents. That doesn't mean anything. I know brokerages with hundreds of agents and make zero profit, and even worse, negative profit. So it's got to be about, well, what do you want this to look like? What is it that you want it to achieve? Don't you want to be profitable? Well, you got to start with that first. And so when you do the reverse engineering again, you say, okay, 30 agents is the conservative maximum in this marketplace. Now my goal is that I want to make $5,000 net profit per agent per year. When I get to that number, that means I'll have $150,000 in net profit. And here's another thing I want to mention about net profit, and I think this is going to be really important, folks, because you got to realize a lot of smaller operations are real estate agents that start a brokerage. So you've got all these different roles. When I talk about net profit for the brokerage, I'm saying just for the brokerage, not adding anything into the mix that is that is driven by any other forces. For instance, if you still sell real estate, that means you keep all of your real estate sales commissions as the broker owner. So when we talk about net profit, I see a lot of income statements where they throw the real estate commissions into the mix. Well, that's not fair. I look at things from a view of a buyer. If I was going to buy your office today and I see a P&L with $150,000 net profit, I want to make sure that you didn't put $100,000 of your own personal sales commissions into those numbers. See, this is where the confusion lies. We can get confused between the pollution, if you will, the accounting perspective and the operational perspective of things. Yeah, the accountant might say, yeah, throw it all in and only take so much out of your business, leave the rest in as retained earnings, and then you just pay the corporate tax on that and blah, 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 blah. But this is where all of a sudden the pollution and the confusion lies, because we're looking at an accounting report and not converting it into an operational view or perspective. So the view of a buyer, if you will. So again, realize that when I'm talking about $5,000 net profit per person per year at the end game, when you get to 30 agents, which gives you $150,000, that means it does not include any of your personal sales commissions, number one. Number two, it also means that you're paying yourself a legitimate salary for running the operation. So if you're the person who's doing the hand holding, the nose wiping, you're doing the training and the recruiting, that's the management role, if you will. That's the core management role. Well, that means you also deserve to be paid a salary, and that number of that salary needs to be budgeted into the expenses. A benchmark that we use all the time for management salary is $2,000 per agent per year. So let me rephrase this again. That means if you have a goal of $150,000 net profit, that makes your business worth about $500,000. You're still paying yourself, in addition to that, all your personal sales commissions and $60,000 in salary to run the operation. And if you're not running the operation, then you have that budgeted amount in order to pay somebody else. Again, from the view of a buyer, I'm going to look at that P&L and say, well, what did you pay yourself? Did you run the operations? Did you manage it? So that's another thing to keep into mind. Again, recap. You're keeping all of your personal sales commissions for yourself if you still sell real estate. Number two, if you're managing the office, you're paying yourself a $2,000 per person per year salary. In this case, 30 agents, $60,000 is being budgeted in. Number three, if you own your own building and you don't pay market rent, you want to budget into the numbers what market rent would or should or could be for leasing that to some other tenant. Again, when we look at net profit, it's taking those considerations in mind, that a portion, proper amount has been allocated towards the rent if you own your building. So if you notice, with all of these things, you have the fourth role is the role of the owner, right? So you can be a real estate agent, the manager, the owner of the holding company, and you own the real estate company. The person who owns the real estate company gets paid the profit. But if you manage the office, you get paid a salary. If you're a holding company, you get paid the rent. And if you're a sales agent and you're still selling, you get paid your sales commission. So when we look at net profit, we make sure that all of those other aspects are normalized properly. And we're talking about pure net profit just for the operation, 150 grand, so you can sell it for $500,000, because somebody's going to buy it wants to see that there's management salary into the mix, that no personal sales commissions are in there, that you're paying market rent. So that's step 2, if you will. So step 1, again, start with the end in mind. Let's call it 30 agents. Step 2, what is the goal for profit? It's at $5,000 profit per agent per year. That's 150 grand, pure net profit. So ultimately, the next step is, okay, how about the expenses? So let's talk about some of these benchmarks here too. First of all, I like to separate expenses into 2 buckets: variable expenses and fixed expenses. With both of these groups, there's 3 variable buckets and there's 3 fixed buckets. Let's talk about the variable bucket first. So in respect to variable expenses, there's the 3 buckets. The first bucket is the manager's salary. Again, we talked about that, $2,000 per agent per year. Then there's the employee salaries. That's everybody else besides yourself: admin, secretarial support, marketing, and so on. That I have a benchmark of $2,500 per agent per year. And then the third element in the variable side is office supplies and expenses. And that can be about, let's call that $1,000 per agent per year. So if you add that together, $2,000 for a manager, $2,500 for employees, that's $4,500 plus $1,000 for office supplies and expenses. That means you need to budget about $5,500 per agent per year for variable expenses. Now you got the fixed side. So what's the fixed side? The fixed side also is in the 3 buckets: rent and occupancy, dues and subscriptions, and the third one, we can call it communication expenses. Again, benchmarking, again, if you will. If you look at dues and subscriptions, we usually find that to be about, I've wrote down here in my notes, about $1,000 per agent per year, and about $500 per agent per year for communications expenses. That's $1,500 for those 2 of the 3. And then for rent and occupancy, about $2,000 per agent per year. So now you're at $3,500 on the fixed side. So if you add those 3 fixed buckets, it's $3,500 per agent per year. If you add the 3 on the variable side, that's $5,500 per agent per year. Now look at how simplistic this is. 55 plus 35 is $9,000 per agent per year is the budget. That's our benchmark. You need about that in order to carry the cost of any agent. 9 grand. I have brokerages that are only earning 7,000, 8,000 gross profit per agent. That's not going to work. So, but think about this. So you got 55 on the variable side, 35 on the fixed. That's $9,000. Plus you got to add in your profit. Let's call it $5,000. 9,000 plus 5, $14,000. That is called your gross profit per agent objective. And see, guys, this is kind of how we do the reverse engineering effect. We look at what is it going to cost. So because we've done 700 analysis of brokerages, worldwide, essentially, 700 offices, we know these numbers inside and out. That's what it costs in order for you to facilitate any real estate agent, and realize that $5,000 profit objective only gets realized when you get to that end game. In this example, again, we talked about 30 agents. So again, just as a recap, you start with the end in mind. You got to understand your demographic. How many agents potentially can you actually attract to your organization? If we use the example 30, then you build accordingly. So when you're looking for space and you're looking for a place to work out of, realize you don't want that space to cost you more than $60,000 a year. And I know certain demographics can change if you're in California versus Iowa and other places, or Indiana. But the reality is we got to start with some sort of a benchmark. So that's a good starting point right there. So when you get that space, now you know you're building up to 30. You know what your costs should be. So it's going to be about $9,000 per agent. You choose how much profit you want to make. And if you want to follow through with the benchmark that I've established over the last number of years, now realize a benchmark is not necessarily best practice. I have clients that generate $9,000, $10,000 net profit per agent, which seems unheard of, but it's possible and it's true. And I know every marketplace is different. I get that. But the reality is, what are you building and what is it that you want to accomplish? You decide how much profit you want to make. So if you know your costs are going to be 9 grand per agent and you want to make 5,000, you have to earn 14,000 in gross profit per agent per year. That's what you have to gun for. Your comp plans now have to align with that. You have to be able to achieve that objective. That's going to be critical in order for you to achieve what it is that you said your goal is. That's how you set a real goal for a brokerage, not just some number out of the air like I want this many agents and I hope everything works out. And it's not the way to look at it. So folks, I hope that was helpful for you to understand why it's so important to be able to know what your costs are, what it costs you to have an agent. Because the other thing that you want to look at, of course, is, again, what is the end game? Shouldn't it be to end up, you build something in order to sell it, so you have something that's worth, in this case, $500,000 at the end of the day? Absolutely it does. So we could go a lot further on all of this, but here's the biggest challenge you have, and that is knowing how much gross profit you're actually making, because gross profit is so polluted when I look at income statements, and there's so many things that pollute it. So you need a little bit of expertise to figure this out, and I'm not trying to withhold anything from you. I'm just letting you know that sometimes you got polluted income statements. If you got regional fees collected and you got that in the gross revenue, that misaligns your whole gross profit number. Gross profit is only the money that you make from, let's say, a desk fee, transaction fees, percentage fees, but not, like, let's call it regional or corporate flow-throughs. It does not include anything external like that, because that's a different type of number. It's an in and an out. So step one, you got to have clarity as to what your gross profit is right now if you're an existing brokerage. So folks, I hope that was helpful, just giving you a perspective as to what to look at and how to look at your numbers, or how to understand your numbers a little bit deeper. Of course, you always know how to reach me if you want any more clarity on anything we said today. So this is my take on our profitability perspective for the day, and wishing you all a profitable day.